Everybody, just 1 second. I'm just going to turn this light down a little bit. Oops. Technical issues. Hope everybody is doing well today. I think we're good now. Welcome to the stream. Tons of information to get to. If you're new to the stream, welcome. This is the Thursday weekly live stream. Just let me know that the audio is good today, and video quality will be improved next week. I have a new webcam on the way, and it's not bad today, but I would like to see everything sharp. And I got to tell you, today I'm super happy. Despite everything that's going on, we got Growth Street, crazy news this week. This thing with Metro Bank and Ratesetter. And I got to tell you, I'm feeling just very grateful. And, I have money invested in Ratesetter, through Ratesetter, not in Ratesetter as the company. But I've really been focusing on gratitude this week. And I just not been worrying too much, about financial fears, about what's going on with the economy and COVID. We just have so much stuff going on. And I just feel good. I'm glad to be here with you today on this Thursday evening. And just a quick note, couple of announcements next week. We're going to stream at 7:15 p.m. So we're going to move things forward an hour so you can get your beauty rest if you need to, which I definitely need mine. But so 7:15 from now on a Thursday evening for the stream. Let's do a couple of quick disclaimers here. Remember, I have no idea what I'm talking about, and you should listen to anything that I say. Just kidding. Of course, this is purely opinion-based. Seek financial advice if you need it. But, all informational-based and lots of news. So keep that in mind. Do your own due diligence. Do your own research. Don't listen to what I just say. Make your own decisions. And quick note too about my top 5 list is I do update that on occasion, and things really change quickly in the peer-to-peer and investing world. So just because I have something on a top 5 one month doesn't mean that it's going to be there on the next month. And, I advise you to look at your investments. Obviously now with liquidity being a problem, it's not easy to move in and out of investments like it was a few months ago. But keep an eye on that. Keep an eye on the changes, and don't be afraid to make changes in your investment portfolios if you need to. There is no such thing as loyalty in the investment game. Your main goal is going to be just to protect your capital, and you need to make changes on sometimes quickly to do that. So I'm glad the audio is good today. Let me know where you're checking in from. As always, I love to hear from them. I'm still here in sunny Florida. Is very hot. I don't know when I'm going to be coming back to the UK, but it doesn't look like it's going to be anytime soon. So I'm sort of doing everything remotely now at this time. I think a lot of people working from home. So we'll just give a quick hello to everybody in the stream. Brian, as always, from Woburn, first commenter up. Congratulations. Philip Walters, Milton Keynes. We have Sue. Very soggy North Staffordshire. It seems like North Staffordshire is soggy every week there, Sue. Hi, Chica Boy. Nice to see you, sir. Don't forget to hit the thumbs up on the stream, as Chica Boy will get very mad at you if you don't, because by the end of the stream, he'll say, hit that thumbs up. Peter, Leatherhead. Hi, Keith and Lincoln. I'm glad the audio is perfect, Gary. Thank you. We have Nottingham. We have Paul in Kenilworth. David from Norfolk. Nice to see you, David. Mike. Very, very important person here tonight, Mike. Thank you for all the work that you do on your action group. I will post links to that. And hi, Moist Southampton. It's a strange word, isn't it? Moist. Let's see, John Day in Nottingham. We have Aki Chappie, and of course, Accrington, as always, Alan in Basingstoke. Mark. Hi, Mark. Thank you for all the work that you do in your action group. We really appreciate that, Mark Mason. I And I will be posting links to the Funding Secure and the Lendy Action Group that both Mark Mason, Mike Powell are involved in. We appreciate you being here. And we'll go ahead and hi, ES. I presume you're still in Portugal. If you have any questions, pop them in the stream and I'll answer as best as I can. Craig, hi in Kilmarnock, which I presume is in Scotland somewhere. And yeah, so what we're going to be talking about today, let me go ahead and just put these action group links in here so you have them. This is the Funding Secure and the Lendy Action Group Facebook groups right there. Join them if you're investors in Lendy or Funding Secure and you want to keep up to date on the latest information. Those are the best places to go. If you haven't joined the Facebook group yet, you can get faster information on the Facebook group through Financial Thing. It's a closed group that I will accept you once you apply. Just hit the join and then I'll manually bring you in. Please like and subscribe to the YouTube channel. Today we're going to be talking about this Growth Street resolution event, what's going on with Ratesetter and Metro Bank. Octopus Choice had a webinar this week, which I thought was really, really excellent. And this is the second one that they've done since all of this poop hit the fan. And we're going to talk about a little bit about the FCA proposal of banning mini bond and listed bond marketing, which I think is awesome. And why COVID is actually doing you a favor for your investments long term. A little bit of assets talk, usual stuff. And let's get right into it. Again, put your comments down below and I will get to them. So I'm just going to run through this information very quickly. Octopus Choice, they had a webinar. And I've actually watched both of them. I think they're good. I would advise if you're an Octopus Choice investor, go ahead and watch the webinar. Also, if you're not, I would go ahead and watch the webinars anyways, because my personal opinion, you're going to see a company that is doing things right in the peer-to-peer lending world when it comes to what's going on with COVID, their transparency, they're staying connected with their customers, and they're offering really good information. So if you want to see a company that's doing things right, I recommend go ahead and watch those webinars. The first one was by the CEO. I forget what his name is, but he did the first one. And then the second one was by a couple of people that are higher up in the company. And they were very informative. I think Octopus Choice is definitely one of the companies. And again, they're on my top 5. But I think they're doing things right. They have a ton of funding behind them. They have what every peer-to-peer company needs right now, and that's money to take them through this difficult period. And we'll talk about Ratesetter, why they're looking at this merger with Metro Bank and their need for cash right now. But Octopus Choice has several different companies with inside their business, and which is the Octopus Group. And that's actually, they have about 8.5 billion pounds under management, which is a pretty big amount of money. So within Octopus Group itself, you've got Octopus Investments, you've got Octopus Renewables, which is a clean energy investment portfolio. You have Octopus Ventures, which is their VC, their venture capital business. Octopus Energy, which they claim is one of the biggest generators of renewable energy in the UK. And Octopus Real Estate, which they have 2 billion pounds under management. And then they have Octopus Wealth, which is a financial advising service. So what you get is this big umbrella of a company is able to fund Octopus Choice. And I think that's one of the reasons why they're really just not concerned as much as I think some of the other peer-to-peer companies are. They have the funding from the Octopus umbrella to get them through these difficult times. On the webinar, by the way, which is by Simon Rogerson, he is the CEO. They were just talking about, this is not really an investment issue with Octopus Choice. It's more of a liquidity issue. So every peer-to-peer company, that they have this problem of balance, right? They have to balance enough lender investment money coming in to fund enough borrower loans. And when this balance goes crazy, then these companies start to look at things and say, well, we need to make a liquidity event. And the liquidity event essentially means there's just not enough money to pay out people that want to exit. And also, on the other hand, there's not enough investment money coming in to fund new loans. So it creates a problem of illiquidity. And what Octopus is doing to solve that is they're saying, look, we're going to put a pause on lending. They also say we don't know if this is going to be a permanent thing. They expect the volatility of what's going on in the economy to last for several months. So they're going ahead and pausing the investments. And what's happening, and I think you're seeing this with Ratesetter, is sort of like this snowball effect that people get spooked. So they see other people trying to withdraw, other people try to withdraw, and it creates this snowball effect. That's what's happening with Octopus Choice. They're expecting that their loans will continue as normal. They have a pretty good loan to value, an average about 63%. Octopus has about 12.5 million pounds of cash of their own money in first position. So that means if any losses are taken, that Octopus takes the first, I believe it's 5% on every loan, which is great for you. I mean, skin in the game. Every company of peer-to-peer that has skin in the game is a big plus for me, because it means they put their money where their mouth is. And if there's a loss, they're going to take that first loss. And of course, they're not going to take the entire loss, but they're going to take the first whatever percentage loss that they have of their own money in that loan. Octopus is, again, letting you withdraw the interest that's coming in from loans and anything that's in your holding account, so nothing is frozen like it was with Growth Street. I think you're going to see more loans repaid early. I've looked in my portfolio, and you do see loans continuing to be repaid. They've gotten rid of the platform fee, so now their target interest rate is about 5.5% returns for investors. Also, if you want to talk to the CEO, he's published his email address. If you're an Octopus Choice investor, you can go ahead right there and email Simon. He is the CEO of Octopus Choice. I will go ahead and repost the links, Alan, to the Octopus Choice webinar when I've done going through this bit of information about Octopus Choice. And Choice has lent over 11 years at 4.5 billion pounds, and they've had a very, very low loss rate of 0.01% or less, 700 loans, and no capital loss. Now, as of, let's see, they're expecting that right now they have 250 million pounds in loans. That's 370 loans, 50% residential, 25% bridging, and 25% commercial. Their redemption average is going to be about 15 months. And they say the capital payments have continued. They have offered loan repayment holidays of 3 months to 60% of the loans that they have. In general, they see a very strong buy-to-let demand continuing because people need a place to live. And they are just looking again to balance this lender and borrower problem of not having enough money coming in to lend on new loans, because customers are obviously scared what's going on with COVID. So I was very impressed with the webinar. I thought it was really good. Again, I'll post the links here to webinar number 1, which is by the CEO, Simon Rogerson. That is right here. Webinar number 1. You do have to register with an email address, but it's not a big deal. And this is the latest one. And again, if you're not an investor in Octopus Choice, I would still recommend go ahead and watch the 2 webinars, because you're going to see a company that does things right. And if they do continue to do peer-to-peer lending, I think they're a very strong business in that field. And hopefully when things sort of wash out with this economic uncertainty, we'll be able to continue to invest in Octopus Choice, and you'll see what they're like. And I have been to visit their offices, by the way. I was just really impressed by the whole operation, the professionalism, the high standards of what they were doing. They actually give a shit about people's money. And they just have these different floors of different companies. And it was a very impressive sight to see. And I love the fact that they have first position losses. They've got skin in the game on every loan, and they're backed by this bigger company. So that's what happened with Octopus Choice this week. So what else we have here? We'll talk about Growth Street. Ratesetter, and then Grove Street. Obviously, you've probably seen that Ratesetter is in talks with Metro Bank. It's a really interesting situation because Metro Bank has sort of been in the doldrums since 2019. They had a pretty bad year, lost about 130 million pounds on the books, whereas before in 2008 they were profiting, and I believe the region of about 40 million pounds. And then so a lot of people say, well, this Metro Bank is sort of struggling. Why would they come in and try to buy Ratesetter? Well, first of all, no deal has been struck, and sometimes talks actually fizzle out into nothing. But this is a deal that I actually think might get written, and I think it would probably benefit both parties in different ways. Metro Bank, we'll do a little bit of discussion about what troubles Metro Bank has had. So apparently, if you believe the news, which I tend to be a little bit skeptical, but I have seen some published papers on their investigation. What they basically did is they loaned money and then they misclassified the risk of the loan. So, it was kind of like what happened in 2008, not necessarily the same, but companies were just misclassifying the loan risk and saying, well, something was safer than a loan was safer than it really was. And Metro were investigating, continue to be investigated by the FCA and the PRA, which is the Prudential Regulation Authority. Now, having said that, what this deal would do for Metro Bank is give them enhanced loan distribution for unsecured consumer lending. Ratesetter does have a good tie-in on that at the moment, even though Ratesetter's loan underwriting has really dropped. If you look at in 2019, Ratesetter lent out about 700 plus million pounds, and this year they're about 210. I don't think you'll see a big increase in loan writing this year for Ratesetter, but Metro Bank will have that funnel of being able to lend out to unsecured consumer lending, which really helps them as a bank. Metro's also lent before in the peer-to-peer lending space. They lent through Zopa. I don't think that was a profitable affair for them, and they did close that down in 2019. But they do have some experience in the peer-to-peer space, so that shows that maybe they understand the lending because they have done things with Zopa before. One of the problems with Ratesetter, they're desperate probably. I mean, I don't know for sure because I don't know what their cash burn is like at the moment. But if you can imagine, they've only lent 210 million pounds this year compared to 700. So if you do the math, they'd be about 50% down on their lending this year. Obviously, their fee generation has come way down. So they don't have as much money coming in as they used to. And they're also struggling to reach profitability. So that means they have a cash burn problem of just burning through too much money at a loss. So having somebody like Metro Bank coming in and investing in the company is a good thing. It gives them liquidity, and it gives them a good cushion of hopefully cash they can ride out this difficult time and hopefully continue lending in the future. Now, do I think that Ratesetter will continue to be a retail peer-to-peer lender? I'd say it's highly unlikely. I think that they'll probably move to more of an institution based investment model, as has Land Bay, and it looks like that's what's happening to Grove Street. Hard to say at this time. We don't really know, but I wouldn't be surprised if Ratesetter just ran its peer-to-peer retail loan book down and then just went strictly institutional, and lenders like us weren't able to invest in Ratesetter anymore. Ratesetter has been actually proactive. They probably set up this potential deal many months ago. I doubt that this was strictly due to COVID, because they had been taking measures, in the background to make themselves into a interesting company for somebody to come and buy out, like Metro. And then when they reduced the interest rates, I think that was their last sort of step to show that they're being proactive in these difficult times. I've gotten a couple of emails that have asked me, would this mean that if Metro did buy Ratesetter, would the investments become FSCS protected? The answer is going to be no. Any money that would be in a holding account that wasn't invested would be under the protection of the FSCS, but anything that is invested I would say the way the regulations are right now will not be protected by an FSCS protection. What else do we say? There was an interesting quote that said Metro Bank could provide the liquidity needed to support the peer-to-peer loan book of Ratesetter, which is about £800 million in loans. For its part, Metro would get a new brand and a new technology platform. Metro Bank could then use its cheap deposits to fund new unsecured loans from its own balance sheets. So I think it could be a plus for people that are looking to get out of Ratesetter. There's a lot of unknowns right now whether this deal is going to go through or not, but I, as an investor, would be happy to have an institutional bank like Metro pushing it. But I also think that Metro's kind of been a bit of a shit show when it comes to their business. So who knows if it's actually going to work out to be a good investment for them. It'd be nice if Ratesetter could keep operating as a retail peer-to-peer lender, but again, a lot of unknowns. I mean, the main thing that people want right now is liquidity, and we obviously have a major liquidity issue in most peer-to-peer companies, some not included in that, like Loanpad, but most of the other peer-to-peer companies are not offering any type of liquidity, and Metro Bank could actually provide that. So, Grove Street. Obviously what's happened with Grove Street, I'm sure everybody here knows, but if you don't, Grove Street had a liquidity event where they've frozen pretty much all new peer-to-peer lending investments. You couldn't change your investment settings. You were on this constant reinvestment setting. You couldn't withdraw any money out of Ratesetter. And then this few days ago, they announced a resolution event, which meant that they couldn't foresee their peer-to-peer business continuing to operate the way it was. And now they're trying to figure out where to go from here. And there really hasn't been a whole lot of information from Grove Street about what their plans are to resolve this situation. And I think that's probably because they're twofold. Maybe they don't fully understand what they're going to do yet. Or maybe the second thing, too, is you don't want to announce something too early that isn't going to happen. What I foresee happening with Grove Street is since they're on a 30-day revolving line of credit for the businesses, they'll probably just stop lending at the 30-day point, and then they'll recall all of the loans from the borrowers. Now, that's a twofold difficulty. One of them is, well, can you get borrowers to refinance right now? I would say some of them will not be able to get refinancing, but some of them may be able to go through the government-backed CBILS schemes, which means they'd be able to refinance, pay back Grove Street the money, which means hopefully you as an investor would be paid back promptly, which is the best case scenario, right? We want everybody to get paid back. So you've got those two kind of dynamics, and that's what I obviously think the Grove Street is going to attempt to do, is to get those loans solved as quickly as possible. How much trouble they run into with that is going to be the big question. If you look at their website, they've got 22 loans in default right now. I don't know what the status of those loans are, so they don't really publish any individual information to retail investors like myself. But, we don't know what that exactly means, how big those defaulted loans are. There's just not a lot of information on their loan book about it. That's what I figure. Now, on a personal note, which is really surprising, and by the way, just if you are an investor in Grove Street, I'd advise you go and read the investor terms and the loan loss provision policies, which I'll post right here. What that's going to do is familiarize you with the way that the the Grove Street Provisions Limited works. And Grove Street Provisions was put in place to manage during a resolution event that we're having right now. So now Grove Street itself doesn't manage it, but Grove Street Provision Limited, which is called GSP, manages it, which is run by a board of people. I don't honestly know who's on the board because I haven't researched it, but I'll have that information for you next week. And the resolution, Grove Street Provision Limited, will be handled by them. They'll manage the repayment from the borrowers and the distributions to the investors. What it says on Grove Street's website about this is Grove Street Provision Limited, I'll refer to as GSP. GSP is free to use funds held in the LLP, which is the Loan Loss Provision Fund, collected from borrowers during a resolution event to fund expenses or other payments which it reasonably believes will maximize the probability of borrower repayment, whilst also ensuring borrowers continue to be treated fairly during the collect-out process. For example, funds held are likely to be used to fund recovery action against defaulted borrowers and may also be used to fund new drawdown requests. If it is determined that a failure to fund the request will materially impact the borrower's ability to A, continue trading, or B, repay their facility, or 3, refinance. Now, what that means to you is that if there's a lot of different defaults on Grove Street, that they can use the provision fund to help recover those loans. So we just don't know. I think, again, this is going to be something that's going to be updated probably every 30 days if I had to take a guess. What you need to know is that right now, according to the website, they have a $692,000 cash balance in their loan provision fund. But they've also been mentioning numbers of £5.8 million in liquidity, and I don't exactly know what that means. And they are going to be stopping retail peer-to-peer lending, and they will be trying to pursue institutional funding. So similar to Land Bay, what's happened, Grove Street has obviously seen that they can't make a go of their peer-to-peer lending model right now the way it is. So they're trying to transition into institutional funding. I don't think this is the last company that you'll see who is transitioning from retail to institutional. Hopefully the best case scenario is that Grove Street can come through and just pay back every retail investor. So you can go ahead and withdraw any of your unmatched amounts, and you can withdraw anything that's in your holding account now. Personally, I've done this a couple of days ago. There was, personally, this is very strange because my funds were being reinvested, and I didn't expect for my money to be sat in the holding account, and all of it was, so it didn't get reinvested. I don't know why that is. I've heard other stories of people who have a partial repayment and have been able to withdraw that. I was lucky enough to have 100% my funds returned to my holding account. So go log on if you haven't already and see where you are with that. But you can withdraw everything. You're not going to receive any interest anymore on your funds. So personally, at this point, when a company changes positions like this, I just want to see capital being repaid. I don't really care about 5%, 6%, 5%, whatever it was, 5.3% a year in annual interest. Right now, you just want to get your capital back. So you won't receive any more capital. The total amount you are owed is the principal amount you invested plus interest accrued on the loans up until the date of the resolution event. And it says your investor dashboard will display this information. All loans outstanding have been assigned to Grove Street Provision Limited to manage repayments from borrowers and distributions to investors. Investors will now be repaid quarterly, and any losses will be spread across all active investors. And again, they are pursuing institutional debt funding. So what are the chances that you get all your money back? I'm saying I'm feeling pretty optimistic right now about Grove Street. Yes, they did used to be on my top 5 list. And then once Greg Carter, the CEO, was replaced very suddenly, and then they had the 2 rather large loans that went bad, I took them off the top 5 and put all my stuff up for sale, put that on the review. And that was just pretty good timing on my part. It's pure luck because I didn't have the foresight to do that with Lendy. But Grove Street, I was able to pull out of that investment. But I do think that Grove Street wants to pay you back your money. I hope that they will do the right thing by investors. It seems like at least some people are getting paid back now. If you have had any experience with that, go ahead and put that in the chat, and be interesting to see if anybody's gotten their money back or what your situation is with Growth Street. As far as, if you have a lot invested through there, it's another good lesson on diversification. Make sure that you spread your money around, many different investments and don't have all your eggs into one basket. I don't think this is going to be the last peer-to-peer company that changes direction or becomes a casualty, unfortunately, nor do I think it's the last company business that's going to have problems during COVID. I mean, there's a massive economic world problem going on there right now, which looks a lot better than I think it really is. So, yeah, just be careful and make sure you diversify. So Philip says, I viewed the Octopus Choice webcast yesterday. I'm not convinced they will continue in peer-to-peer. Yeah, I don't know that they will either, and there may be something that they pause now and then relaunch again once things have settled down. But I think they're going to do what's best for investors. If it's not best for investors for them to continue lending in the peer-to-peer space, I believe they will pause it for sure, and not a big decision. I mean, not a decision they're taking lightly. Go ahead and watch those webcasts. They really explain that. Hi, Annabelle and Soggy Sherborne. Nice to see you. Peter says, I can't see those webinars. It says I need to re-register. Just shove in another email address. It doesn't matter. They don't make you actually have an email. You can just put any email address in there and just put that in. So just re-register with another email. John, I've not looked into Elfin Marketplace. It's still on my list of things to do. Rodney says, I've been in last week's session. Your links at 7:45 sent me that. Oh, I've done it. Made another mistake on the email send out. So it's, yeah. What can I say? It just goes to show I'm perfectly imperfect human being. But glad you made it, Rodney. It's not that hard to get to the original stream. Chica Boy says he got out of Ratesetter 2 years ago. Hi, George in Bridlington. How are you? Arthur Atchison. Like the city and the county in Kansas. Never been there. Nice to see you, Arthur. Isn't that a bit naughty of GS? No stars for their communication, minus stars for redirecting interest to themselves. Yeah, communication has been a bit poor, but I think when you don't know what the heck you're going to do as a decision, this is a big decision for Growth Street. It's not something they take lightly, and they probably didn't know what they were going to do. So when you don't know what you're going to do, you just don't start saying, putting out emails saying, well, we might do this, we might do that. I think they handled it okay. What I do appreciate, and I'm okay losing interest, if they need that interest to stay afloat to get to where they need to be to repay everybody's capital back, take the interest. It's no different from what Assetz Capital is doing, having that annual management fee of 0.9% to go ahead and make sure they have the financial cushion to continue operating. So, Annabelle, I wouldn't, get yourself in a fret about Growth Street just yet. And again, let me know, Annabelle, were you able to log in and remove any of your funds out of there? Because everybody is having different experiences. Funding Circle are not thinking about retail investors with FISA's accounts. Yeah, I don't invest through Funding Circle anymore. I stopped a while ago. Chica Boy has been lucky. Yes. Chica Boy, if you've got any good stock picks, let us know, because you looks like you got well with the timing and Ratesetter and Growth Street. ES says, I had the Growth Street IFISA. It was returned to my cash account with interest, and I've already transferred it out to another company. ES, when did you do that? Brian in Woburn says, I withdrew the last of my cash account money from Growth Street yesterday. I withdrew a large sum before Christmas when Greg Carter left. Yep. Mike says IFISA were 1-year mini bonds, so actually very different to normal peer-to-peer loans. Fell foul of FCA restriction. Yeah, the mini bonds, I hate them. Don't like them at all. Yeah, I don't have any water here, Chica Boy, and I don't want to go to the kitchen to get some. So you're just going to have to put up with my dry, low, deep voice right now. Mike Powell says, I suspect Grove Street have just repaid the bonds and had guaranteed to top up the interest. Yeah, everything is a suspicion right now, Mike. We don't really know. Sue, I got what was in my holding account with Grove Street return within the hour. Yeah, Annabelle, I did update my review on Grove Street when I made that decision. So unfortunately, we don't always check those reviews all the time, but yeah, I did update the review. Craig Graham, no money available to withdraw from Grove Street dashboard, says next update, payment 15th of September. Yeah. Phillips received 85% of his Grove Street funds yesterday. Not much left with them. Yeah, and it's really interesting. I don't know how they're deciding who gets what when, because I would imagine, the same position as everybody else. We got 53 people on the stream, 30 thumbs up. You can go ahead and hit that thumbs up. It helps me with the YouTube search algorithm. I very much appreciate each and every one of you. My goal today is to keep the stream below an hour. I know you're busy, and I want to get through the information. David says, I think the risk-reward ratio is still favorable to be invested in peer-to-peer lending. Yeah, I posted about this yesterday on the Facebook group, which I will, let me link you to the Facebook group in case you haven't joined. Oops, no, that's not going to work. I'll put that Facebook group in a minute. But do I think it's still risk-reward? I do if you get the right peer-to-peer company now, and there's some that are doing things well. I think Crowdproperty is, I like them as a new company. I think Loanpad, I think Kuflink, anybody that's still offering new loan deals that's been active, I think your risk reward is still okay. You just have to understand that in every single investment that you put your money into, there is going to be liquidity risk. Okay, and if you had stocks in beginning of end of February and March, you saw the liquidity change in the stock market due, pricing dropped, right? You can only sell a stock if there's a buyer to buy it, and whatever that buyer is willing to pay for you, you get to sell that stock. So you have risk in that, right? You have risk in peer-to-peer lending. The liquidity dries up. You're seeing that right now. And you can even go so far as to say you have a liquidity risk in a bank account. It happened to the people in Iceland when they were queuing to get their funds out, and they couldn't when the country was in financial dire straits. So as long as you understand that there is going to be risk in every type of investment that you make, then I think that there is a certain amount of risk versus reward possibilities that can be on the upside in peer-to-peer lending. It's just, again, we're all trying to figure out which companies are going to survive. And this is why I mentioned at the beginning of the stream that COVID is really doing you a favor. And I know it may not seem like that, but the fact of the matter is that the peer-to-peer and alternative finance sector needed a economic downturn like this to happen. It had to. It was going to come eventually. Thank God it didn't happen like it did in 2008 and 2009. But what this is doing is it's showing which peer-to-peer companies have the strength to push through these difficult times. And the ones that can come out on the end are the ones that you are going to be pretty sure that you can comfortably invest through. And COVID had to do. I mean, COVID has given us that really wide-eyed look at how an economic event can affect your investments, and not just peer-to-peer lending. I mean, look at your stock portfolio in March. It was down probably 30%, unless you were some genius trader that shorted the market and knew. But for the most of us, our stock portfolios were down 30 to 35%. There's your investment risk, right? It comes with everything. So as long as you understand that, as long as you diversify, I do think that peer-to-peer lending still has legs if you invest through the right companies. Let's see. So I'm just reading some of your comments. If you have questions, just put them down below. Yeah, I think the problem that peer-to-peer is going to have now is this low interest rate situation. When interest rates are low, it doesn't favor us as investments who are lending in peer-to-peer companies in general. So I don't think interest rates are going to rise up anytime soon. So Alan says he received uninvested funds from Growth Street in less than an hour. That's good. LendingWorks, Sue says, is there any news on LendingWorks? There's absolutely nothing. Haven't heard anything from them at all. Annabelle says was trying to log on just now, but it's not responding. Are you talking about Growth Street? Try again. I was able to log on earlier. It's probably just a lot of traffic going to their website right now. Yeah, I think LendingWorks has been pretty poor with their communications, and unfortunately, so that's sort of just a wait and see. Thank you for the thumbs up, Cheek Boy. Let's see what else. Gary says, I've been looking at Property Crowd again recently, but still confused by their offerings. These essentially mini bonds. No, they're called coupon. You're buying essentially coupons in an invested property. It is a little bit confusing to understand. To be honest, it's topic for another stream. Gary, if you want, I can cover Property Crowd next week if you'd like to just hold on. It's not strictly peer-to-peer. And I believe, they're sort of in a pause mode at the moment too with Property Crowd. Rodney says Assetz communication with retail customers is first class. Yeah, I agree. Yeah, thank you for that, Mike. I was talking about Crowdproperty. Mike, Gary, don't get confused between the two because there's a Property Crowd and a Crowdproperty. Yeah, try again, Annabelle, Grove Street. Annabelle says she's withdrawn £64. Next payment date, 15th of September. Okay. Yeah, it's very interesting. I don't know how they're deciding who gets money and who doesn't. Why did I get paid out and Annabelle got paid out 64 quid? It's a great question. If I could get anybody to respond to me, I would ask them that. So Growth Street CEO put out a quote. I'll just read this. We have begun the process of negotiating additional sources of financing and are confident that the stability of institutional backing coupled with ever-improving technology will enable Growth Street to continue to serve small and medium enterprise businesses across the UK. It is our absolute intention to work during this period to return as much of our peer-to-peer investors' capital as quickly as we reasonably can. So if you believe that quote, they're planning on paying you back as quickly as possible. So Loanpad, quick Loanpad update. Everything seems to be running along as normal with them. They're just south of 30 million pounds in their loan book, steadily growing. Average loan to value is still exactly the same as it was last week, 26%. Still one loan in default of 150 grand. Average loan size 387,000. And yeah, if you want to look and see what type of loans Loanpad are doing, this is their single defaulted loan. You can look at the picture right there to the property. I still like Loanpad. I think they're doing good things. Crowdproperty announced this week they've lent £75 million total. I've been using the auto investor. I do have a video. I just haven't finished recording it yet because I'm still testing out the manual investing. I actually have to get up at 4:55 a.m. tomorrow morning to try to hop on and see if I can get a manual allocation into the loans. But so far, I've been using the auto invest. I've been getting funds invested through the auto invest in Crowdproperty, but only 50% of what I've asked for. So I'm imagining there's just so many people on the auto invest that Crowdproperty is just giving them a small piece of the pie for each loan. But happy so far. I know some people in here use Crowdproperty and have been very happy with them. There was a news story. If you are invested in mini bonds, I would be very careful about mini bonds, whether it's through peer-to-peer lending or property-backed mini bonds, anything like that. The FCA is proposing a full ban of mini bonds and listed bonds in marketing. Basically, people just don't understand what they are, and you have these undereducated people that are going ahead and investing. They're getting an email through their inbox that says 8% return secured by property in this bond. Looks like a good deal on paper, but in fact could be highly risky, and I certainly would want to receive a hell of a lot more than 7, 6, 7, or 8% on a mini bond offering if I was putting any money in. I'd want to get, honestly, 12 to 15%. James says, the wait and see situation with LendingWorks, is it potentially in some trouble? I haven't heard anything about LendingWorks being in any trouble at all. So I just don't think that they have any news to share so far. I think a lot of these peer-to-peer lenders are just sort of scratching their heads thinking, what are they going to do? Because they don't know how long this is going to last for. And I could potentially see this COVID situation going on until the end of the year. You could possibly see LendingWorks pivot into a different type of business lending or whatever they're doing, consumer lending. I think this is just the same as every business, right? Even my own business now, I'm having to pivot and change as COVID has really affected it. And I think that LendingWorks is absolutely no different. If you can do me a favor too, I've been really trying to get the quality of the stream better with the lighting. And how does it look on your end? If you can let me know what the video stream quality is like, because it's not the way that I want it to be in the past. It's been a bit grainy and blurry, but I have this big yellow light shining in my eyes at the moment. So let me know how the stream looks. Let's see what else we have here. So we talked about Octopus Choice, we talked about Ratesetter. We'll see what happens in that. I wouldn't expect any news this week. I wanted to mention Kuflink. Let's see. So you said the stream looks clear and sharp to me. Okay, good. Better video than previously. All right, so I'm getting a new webcam tomorrow. I'm quite excited. Hopefully it's going to be nice and sharp, but we'll see. Thank you, David. You didn't have to go that far as to say I look beautiful, but maybe some makeup. Hey, Mike, I don't think the makeup would help. So no, I don't mind the light. That's good as long as it's good for you. Let's talk about Kuflink. Anyways, Kuflink's been supplying new deals, which is good. It means they're out there writing new business. But one thing that I wanted you to be aware of, if you're sort of new to peer-to-peer lending, is just be very aware of second charge loans. One of the things I don't like about Kuflink, and I have a great relationship with them, but I will say that if Kuflink, you're listening, you need to pay more than 7% on a second charge loan, because the risk on a second charge loan is way, way higher than on a first charge, for the most part. Kuflink doesn't really tell you what the first charge is if they are offering a second charge loan, which I think is a major disadvantage to you as an investor, because you don't know how much money your second charge is sitting behind. If it's $100,000 loan and the first charge is 70, you have a second, and that means you would only have access to in a default situation, being able to get a piece of the last 30,000 of the 100,000 pound loan, which puts you in a bad spot. So be wary of second charge loans. I tend not to touch them myself. I don't even touch them at 12%. I just don't like second charge. I've been in one before that's defaulted and has resulted in very poor recovery. So just make sure you read on the Kuflink loans which are first and which are second charge loans. And also, I'm very, very wary these days of land loans. I don't like raw land loans. I pay very special attention to where that land is if it's out in the middle of the countryside and somebody's planning a retail property development on it. I don't tend to go for those things anymore because they're very hard to sell, right? It's hard to sell homes to people that live out in the middle of nowhere. So defaults can be a problem. So I'm wary of land loans if they're in a city or somewhere that's close to an urban area. I don't mind them so much, but the loan to values have to be low. So when you're investing in land loans, be very careful. At the very least, check the location and the property type of loans, especially if they're second charges. Again, make sure that you look at the valuation documents, make sure that the property is in an area where people actually want to live. You know, maybe not areas like Skegness, where I'm from, or Bognor Regis. I don't know. I don't know what Bognor Regis is like these days, but just check and see where it is. And they're on the Funding Secure the Funding Secure Action Group. There was a post recently about one of the loans that was valued at, I don't know whether I wrote this down correctly, and I think Mike is in that group, but he could tell you about this. It's called Folders Field. It was valued at £750,000 in 2017. It's now being entered for auction. And there was a lovely quote. The receivers had advised that they have reviewed the current position with the auctioneers and would now recommend re-entering the property to auction with Pugh & Company on the 14th of July at a guide price of a whopping £40,000. £40,000 on a perceived valuation that was given at $650K. So Funding Secure might just get the award for biggest donkey peer-to-peer lending company out there. They would have a difficult time taking it away from Lendy at the moment, but I don't know. Maybe. No, I do not have any sunburn, Chica Boy. I'm white. I'm English. I'm white as snow. If it's a bit bright, let me try turning it down a little bit. Maybe that's a bit better. Anyway, so yes, let's see what else we have here on the news list. I realize how long it takes me to actually put all this news together, but I enjoy it. I do it for you. So we don't have any news at all on collateral liquidation, which should be coming soon enough. We've been through Kuflink, Ratesetter, Octopus Choice. Let's talk a little bit about the stock market. Weird things, right, happening again in the stock market. We're seeing just this volatility. And what the problem is that I foresee happening is everything is propped up. Everything is just being incredibly propped up. You've seen the news. If you saw the news this week about the UK government, and they're buying, I think, £100 billion of bonds, and they're just tossing money into the economy to keep this thing afloat. Interest rates are not going to go up. Not going to go up at all. So, there's many people that think we're in this just huge financial bubble, and you haven't seen it because you've seen your stock portfolio has gone up a lot from where it was back in March when it dropped to the lows. I think it was March 20th. And so you're probably wondering, well, what is going on? And to be honest, I don't think really anybody knows. I don't think that the stock traders know. I know that there's a lot of people that have been trading stocks as retail. People sat in their bedroom. There's been news reports of these massive increases in trading accounts from companies like TD Ameritrade, Charles Stanley, Robinhood here in the US. And there was actually a really sad news report this week of a 20-year-old kid who committed suicide because I think he owed $700,000 on his Robinhood trading account. He was trading high-risk options and obviously made a couple of bad trades. So you've got these traders that are fueling the market, and it's just really disconnected. I would not be entirely surprised to see a massive drop in the markets upcoming. Second wave of COVID coming, who knows? It's just so hard to say, but hang on, because it's going to be a wild ride, I think, with the markets. It could absolutely stay propped up the way it is with all this money going into the economy, and it could absolutely tank the other way. It's like saying, when is it going to rain? Well, you can say, yes, it's going to rain, but when? We don't really know. Okay. So Mike says, Landlord Invest has a lot of second charges, but paying 15%. First charge fully disclosed. No defaults. Yeah, that's what I would like to see if I was investing in second charge, is that it would be high. You know, they're high risk, high interest loans. So I don't think paying somebody 7% is a really great deal. Glad you're enjoying the stream, Chica Boy. Philip says, when Kuflink quotes the loan to value, it should include both the first and second charge borrowings. I won't invest with second charges either. Yeah, I've actually suggested that to them when I was on the call a couple of weeks ago. I said, look, you really need to put that information on there, because I want to know how much the first charge is, first of all. But again, I'm not going to invest at 7% on a second charge loan. IXON says, quantitative easing, the reason you think Bitcoin might be worth a look. I don't think that would be the reason why I would invest in Bitcoin, Mr. Owens, to be honest, because, you know, the reason I'm investing in Bitcoin is because I want separation from centralized currencies governed by banks and governments. I'm going to go ahead and put in, by the way, I made a commitment last week, and I can't remember who it was to. I don't think he's even here tonight, but I made a commitment to post every day on Twitter, which I have been doing, and I plan on continuing to do that. So if you are on Twitter and you want to follow me, you can do that. And I'm going to post the link to the Facebook group. But I do think Bitcoin is a long-term, very speculative play. There's the Facebook group. Join the Facebook group. Come and discuss all your investing questions on the group so you can get your fill. But yeah, Bitcoin is a very speculative play. It's fueled by people that don't want regulation in their currencies. I don't think quantitative easing is any reason why I would invest in Bitcoin. I think I need to rephrase that. Quantitative easing is actually what you're right. It is why I would invest in Bitcoin, is because the government's printing money, pumping money into the economy, and every time they print a pound, they are devaluing your pound in your pocket. So that's exactly why. You're right. I completely messed that up. I think I'm tired. But yes, quantitative easing is one of the reasons why I think Bitcoin is worth a look. Again, I wouldn't put your life savings into Bitcoin, but have a little bit of diversity in your investments. I have a small percentage of my net worth liquidity in Bitcoin. If you want to invest in Bitcoin, I recommend do it through Coinbase. It's the best platform to do it. And then get yourself a hardware wallet, which Ledger Nano is a good one. You can get that on through the company themselves. We did a really good live stream last Saturday on Bitcoin, so you can go on the Financial Tech channel and rewatch that. It sort of explains some things about Bitcoin. One of the questions that I was asked during that stream that I didn't actually know the information for, and I should have done, so I did research, it was if you lose a hardware wallet. So what you can do, you have hot and cold wallets when it comes to Bitcoin or crypto. A hot wallet is kept online through, you could leave it on a company like Coinbase. What I recommend you do is get a hardware wallet, which is a cold wallet, which means it's in your possession. Nobody can steal that from the online website from you. That is what the Ledger Nano is for. And somebody asked me on the stream, if you lose that hardware wallet, the Ledger Nano, how do you get your crypto back? And you can, because there's a security seed, which is 12 to 20, I think 24 characters that you create. So if you do lose your wallet for some reason or it gets stolen, you can use that seed. It's like a special password to retrieve that back. And the person cannot access your wallet anyways, because on the Ledger wallets, there is a PIN number that you have to put in to use it. So unless there's some incredible hacker who can figure out what that PIN number is, they can't. Now, what I would do, the safest way, by the way, if you are owning crypto, is to have two wallets. That way you can duplicate the information from one to the other. That way, if you do lose one, you have your information on the second one without any problems. Obviously, that does come at a cost. Depends how much crypto you own. If you only got 200 pounds in crypto, spending 100 pounds on a hardware wallet doesn't really make any sense. But if you have any significant amount of crypto coin, definitely having two wallets to be able to duplicate your crypto between both wallets should something happen to one of the wallets, and that is a really good idea. Yes, I will not be doing a Coinbase walkthrough this weekend, and the reason why is because at the moment my computer's set up, I'm on a Mac, and I cannot screen share through the way that I have things set up now. But on Monday, I'm hoping that Mac will be releasing the new iMacs, and I will be able to upgrade to the new iMac, and then I'll be able to start screen sharing, and then streaming in a way that I will be able to bring on the peer-to-peer lending bosses who I want them to come on the stream with me, but I can't do it with the technical setup that I have. So if you just have a little bit of patience, I would imagine I would say by the end of July, I'll have the streaming set up differently so I can then bring on guests. Stuart, Laura, if you're listening, Assetz Capital, I would love to have you as a guest on the stream. Representative of Ratesetter, I doubt they will come, especially now with what's going on with Metro Bank, but hopefully they will come on the stream. So yeah. So ES said, you said you were waiting for the stock market to drop again. Are you sitting on the sidelines now after your recent investment? Yes, for the most part, yes, I am. I have some cash. I did buy one. I'll tell you what I did. I don't know if this was a good idea or not, but I bought one Apple stock yesterday. And I can't even tell you the reason why I did it, but something from the gods in the sky said, buy Apple stock today. And here's my thinking. So they have this Apple developer event on Monday. I think you're going to see a huge lineup of new releases from Apple coming up. If not at this developer event in September, you're going to see the new release of the iPhone with 5G, which I would imagine nearly everybody in the world will want to upgrade to 5G because of the speed. On a side note, people think that 5G is very bad for you health-wise. I don't know. I haven't looked into it. I've heard conspiracy theories about it. But 5G is coming, whether we like it or not. And these new Apple iPhones are going to have 5G capabilities, which means a ton of upgrades. So, yeah, like I said, I don't really buy individual stocks and shares. Majority, I would say 95% of all of my investment funds go into index trackers. But I am sitting on the sidelines, yes. I'll probably sit there until November after the United States elections, because the US just tends to fuel other stock market directions. So if the US is up, everybody else seems to follow. I mean, that's not entirely true, but you understand what I'm saying. There's a strong correlation between US and the UK equity market. So yes, David Kennedy, that's exactly right. Nobody knows anything. Love that saying. What did I buy this week? I bought a little bit of I actually had to open a Fidelity account because I opened a joint account with a couple of other people, and Fidelity allows that and Vanguard does not. So we ended up buying some the World Fund, the World Tracker, which I normally wouldn't do, but because I was investing with a couple of other people, that was what everybody wanted to do, and I'm okay with that. I don't think there's anything wrong with the World Fund. Just super low cost, 0.09% or maybe 12%, 0.12, something like that. Very low. And then I bought some US, a little bit of US, Fidelity's US index tracker, and then a couple of I bought the Vanguard Global Fund, which by the way is hedged for the currency because it's in US dollars, so it's hedged for currency fluctuations. So I bought the Vanguard Global Bond Tracker, and then I bought a very, very small amount of the UK Vanguard Bond Gilts, which is a high risk bond fund, but just for, I think, like 5% of the portfolio is a UK gilt. So, but yeah, I what I'm doing with that account is averaging pound cost averaging in. So I'm going to buy a little bit every week, and then hopefully the market stays where it's at. You're going to hit the peaks and valleys if you do that, if you just buy consistently over a period of time. Chica Boy says, please do the thumbs up if you have not already done it. You only have to press a digital button. Yeah, just give it a poke. It takes 2 seconds. Appreciate it. Hi, Martin and Lee. It's nice to see you. Chica says, this is a favorite program of the week I watched. It's a lot better than EastEnders, right? Is that still even on? Or Home and Away? Martin says he's been out spending lots of money. Has Ratesetter been taken over by Metro Bank? Has it been mentioned? Yes, Martin, we talked about Metro Bank. You got to get here on time, Martin. Come on. Stop spending your money and be here. But next week, we're going to start at 7:15 p.m., so be here on time. You're right, Gary. 7% with a 70% loan to value on Kuflink second charge is not going to appeal to me. You're right. Definitely not. James says, do you mind me asking why you're investing with others? Is it a tactic to increase diversification by risk pooling? Not that it is my business to ask. Yeah, I don't mind telling you. It's no, I invested with my siblings. So we had a bit of cash sitting around that we wanted to pull together, and none of us wanted to put it in like our own individual accounts because then it's not significant, but there would be tax burdens on the individual person. So we decided to create a joint account. That's all. And obviously, if you can pull money together, it's better if you can start with a higher balance for compounding purposes over the long run. So, yeah. You hate EastEnders. What is EastEnders? Oh, EastEnders. Chica Boy, yes. Coronation Street. God, that's an old TV show. Yeah. So, yeah, stock market, I would not at all be surprised if it did not take another 20% drop, but we'll see. I don't know. Oh, 1 second. I have a crystal ball now. So whenever you ask me a question, I can look at the crystal ball and see if I can get an answer. But it's kind of it's opaque. It's not clear like a crystal ball should be. So the answers, they're really fuzzy. But yeah. Don't diss Home and Away. No, I used to watch. I love Craig McLaughlin. He was amazing. So James says, what platform do I use to buy individual shares? Okay. I use iWeb, Halifax iWeb, to buy individual, and then Fidelity and Vanguard to buy index trackers, which I love. Index trackers are great. Why do I buy the U.S. since I'm a Brit? Well, number one, I believe in U.S. businesses. I think that if you look over history, U.S. has always had the entrepreneurial business spirit. And I don't think companies like Google are going away anytime soon. Amazon is obviously available wherever you live, in the UK and the US. It's a great product. You've got companies like Zoom. You got companies like YouTube, Skype, Facebook, Instagram. They're huge. And I don't think that they're going to go away anytime soon. So I bet on American businesses because I think America has some huge giant companies that are going to pave the way for innovation and tech. You're seeing it with Tesla and their electric vehicles. You're seeing, space travel now through Elon Musk, SpaceX. You got Virgin, of course. Some of the English companies are listed on the U.S. exchanges anyway, so you do get that exposure. I just like U.S. business. I don't know. You wouldn't be wrong getting a global fund. You just might not. Nobody knows how they're going to perform. As long as you stick to index trackers, I don't like European ones. I think they're too small. I would go for a global tracker versus a European tracker any day of the week. Annabelle says, interested to hear you're buying bond funds. Are they surviving this chaos okay? Yeah, actually, bond funds are doing okay. Bond funds are just to reduce risk. They don't fall in times of stock market blowouts like equity funds do. And if I was 20 years old, I would not ever think about buying a bond fund. Even probably 30 years old, but since I'm in my 40s, I have to try to protect that downside of an equity fallout, and I think a bond fund is really the only way to do that at the moment. So, James, yes, I think I answered that, James. I buy individual stocks through iWeb. Thank you with the ball. Yes, I do need to polish it. I don't think polishing the crystal ball is really going to help those. It's just the way it was designed. Rub your crystal ball for me and get this week's Euro Millions numbers. Okay. Anything with a 7 in it is going to win the Euro Millions this week. So just pick the 7s. Yes, that was good. David, funny joke. I will not rub this ball in public. Anyway, we've been going way too long. Thank you again for everything. Thank you. Please join the group, the Facebook group. Happy birthday, Chica Boy. The 7th of December, because I will not remember that unless you mention it. Again, if you have any questions or comments, please just leave them in the comments on the YouTube channel. Subscribe, please. And that's the wrap up for this week. I don't know if I'm going to be streaming on Saturday or not. I may take this weekend off. I don't know. It may be a last minute decision. If there's anything that you want to know about streaming wise, you can drop me an email. You can post it in the Facebook group. Here's my email. And I'll do a stream about whatever you want to know about. Oh, yes, Arthur, good point. If you are going to invest in a tracker fund, make sure it's for a minimum of 5 years, because it will be it's a long-term investment. I'm glad you enjoyed the stream. Anyway, be healthy, be safe. Remember, there's more to life than money. Be prosperous, and have a great evening. Signing off. Bye. Take care.